What's up, podcast? Welcome back to another episode of the House Show. So in today's episode, let's discuss about credit score. If you are watching this and you are actually a first home buyer, then you will need to get familiar with this credit score thing and how it will actually affect you. So I'll be discussing more in details about this credit score in a short while. A credit score, right, is actually kind of like the report card for a person. For example, me, I have my own credit score, while for you, you have your own credit score. Why is this credit score thing important? So today, let's say you walk into the bank and you requested to loan from them, right? And then the things that the banks will check includes your credit score. So say if your credit score, right, doesn't look that good, doesn't look that promising, then yeah, that is where you might have to pay higher interest for your loans lah. If you have ever dragged any loan payments before, so for example, let's say every second week of the month, then you have to pay off this loan, but you waited for the third week, then you actually pay off this loan for that particular month. That actually will reflect on your credit score. What kind of loans that will actually reflect on this credit score thing? First, of course, we have our housing loans, and then we have our HP loans, and then we have these credit card loans and these PTPTN loans. So PTPTN loans, it's the government actually borrows you money to further your studies after secondary school. So you have to pay back to the government on a monthly basis. As four of the loans mentioned just now, right? Car loans, HP loans, and then we have these housing loans, and then we have these credit card loans and PTPTN loans. Of course, there are more types of loans out there, but this is some examples that I can give for you right now. If you have any of these loans that you delay your payment, then yeah, it will actually reflect on your so-called report card, and then yeah, that actually reflects on your payment behavior. Why is this report card actually important to us? Okay, try to imagine this. Let's say today, if I want to borrow money from you, then you of course check my payment behaviors back then. The first thing you will do is confirm to check my payment behavior back then, right? So if I pay all my payments on time, then you are comfortable with lending me your money, right? Let's say some of my payments is not on time, right? So meaning that sometimes I delay my payment. Then if you actually check on my report card, which is my credit score, right? Then you actually realize that the risk that you are taking is actually higher. If the risk that you're actually taking is higher to borrow me your money, then of course you will want to charge me a higher interest rate, right? Let's come back from that example. So today, if let's say your credit score, your report card does not reflect a good payment behavior, then you walk into the banks. You requested the banks to loan an amount of money to you. If your credit score, right, doesn't look promising, which reflects on your payment behavior, then of course you will have to pay a higher interest lah. I talk about the delay payments will actually reflect on your credit score. So let's say today I am a new buyer. I don't have any delay payments. Does that mean my credit score is promising? In fact, right, it's actually not promising at all. Why? Because they actually can't track my payment behavior. Let's just say again, I borrow money from you. Then you can track my payment behaviors. Do you want to borrow me your money or not? Of course, you will feel more comfortable to borrow me your money if I were to provide you with my payments record back then, right? That is just an example. I'm not actually borrowing any monies from any one of you. Let's come back again. If today you as a new home buyer and you want to apply loans from the banks actually can't track on your payment behaviors on this loan. Do you think the banks will borrow you money to finance your home? I doubt so. If you are watching this and you plan to get your first home before you get your first car, then what actions can you take to craft your report card? You can start it off with applying credit cards. The amount of credit cards doesn't have to be a huge amount. What you have to do is just to pay the amount that you use on time. And that actually reflects on your credit card. So if today you are first home buyer, right? Then you have this payment behavior to show to the banks and say that, oh, look, I pay all my loans on time. What else? If you are actually paying for this PTPTN loans, that will actually reflect on your report card as well, which is your credit score. That will actually provide a record to the banks, and yeah, so the banks will actually won't doubt your payment behavior. And this credit score, right, you can provide it to the banks when you are purchasing your first home to show to the banks that you are actually paying all your loan payments on time. To show to the banks that you are actually a good guy lah, because you pay everything on time, you won't delay any payments. To conclude this episode, right, so if you are actually a first home buyer and yet you don't have any credit score, what you can do is just to apply for credit cards now at this moment. Then the amount that you are spending on that particular credit card doesn't have to be a huge amount. All you have to do is just to pay on time. If you think this video actually helps you, remember to smash that like button and even subscribe to my channel. If you have any questions regarding real estate, feel free to reach me at any of the links below. Thank you for watching till the very end. This is James down here, and I hope to see you in the next episode again.